Greetings and thanks for dropping by for the latest edition of Mentor Mike's Market Movie. Today is Friday, August the 24th, 2012. And as you can see, we've got the chart all set up to begin our replay. And first of all, we're going to take a look at the charts from all of the trading days this week. And before we do that, however, let's have a quick word from our sponsor. As most of you probably know, I am a mentor with Pacific Trading Academy in Los Angeles, California. But for those of you who just stumbled upon me here on YouTube, this is where we come from, and these are the good folks who bring this presentation to you. So if you're interested in learning more about becoming a formal student, these are the folks to contact. Okay, now let's take a look at the charts for this week. Here's Monday's chart, and as you can see, we had a couple of good trades in the pre-market, which I was not around to see, but I did take this first short trade right after the open of the session. Notice that we had a 1, 2, 3 top here, which would have justified this transitional move had we been around to take it. And we made our first daily low pretty close to the predicted time. We ended up with a 1, 2, 3 bottom formation that led to what at first looked like it was going to be a transitional move, but then we hit resistance at the trend-defining moving average and drifted on down. At this point, however, we knew there was a pretty good chance it was going to go higher because even though our price had not gone above the green dash line, our MACD was sitting above zero here, and our stochastic was very oversold. So when this thing turned bullish, we got long and stopped out here, and then one more long trade before the day was out. So we kind of ended up with potentially 4 turning points, although arguably there were just 3, low, high, low, and I believe that the next day ended up having a higher high out here somewhere. So let's just see. Yep, there's the official first turning point on Tuesday. So the high actually ended up being the first turning point here. And this is one of those somewhat rare days when we just had 2 turning points. It was a very unidirectional day, as you can see. And again, we had some good with the trend long trades that I wasn't around for. Caught this short one, transitional move actually. And let's see. Didn't really, I think I just went ahead and got in here. I don't know that we had any divergence or any 1, 2, 3, quite honestly. But it looked like a good trade, so I took it. And then I had some other errands to run, so we missed these 2. But I was around for the last long trade at the end here. Wednesday, a lot of lines on this chart. We had kind of a flat day initially in the pre-market. Caught this short trade. We had some divergence here going from this low to our first low turning point, and we had some bullish divergence with the stochastic, so got long. Managed to hit at least the first target on this up move, but didn't look like it wanted to go very far, so when it turned south again, I got short and based that on some additional divergence with the stochastic, bearish this time, and this was one nice long short trade. This low was right at the predicted time here, or pretty close, and went long because of additional bullish divergence once more with the stochastic. Got long here. I think I was stopped out, then got long again, and finished off the day around this high. This, by the way, is the day that we're going to replay today because I think it had the most interesting things going on. And here was Thursday. This was the day of my webinar. And for those of you who didn't see the webinar yesterday, the video link will be in the written portion of today's blog on pacifictradingacademy.com. And so we had a low, high, low situation here, fairly unidirectional except for this one corrective bounce, which I took to be a fourth wave in an overall bearish five-wave pattern here. So had 1, 2, 3, 4, 5 good trades. Long trade here based on this divergence. This long trade also based on the divergence here. And this divergence was with the stochastic. The second batch was with the MACD. And then finally we come to today's move. And again, missed this first short trade that was with the trend. Hadn't quite had my coffee yet, but I caught this one. We had a 1, 2, 3 bottom, so I went long, hit all 3 targets there, I believe. Then we got long again when this thing dipped, when the blue dipped below the white and started up again. And I actually took this short trade. That's why the divergence here is marked. We had bearish divergence with both MACD and stochastic. So I got all caught up in drawing the lines for the divergence and forgot to draw the arrow. So I actually did take this short trade, and it was sufficient to at least hit the first target. Don't remember if we hit the second or not. But managed to cash one last long trade before the end. So all in all, it was a pretty successful week. And speaking of the week, here is a day session only chart of our week. The green marks the start of the open on Monday, and the red is the close today, Friday. And these, for the most part, are the high-lows that I marked on the charts for the individual days. So that's kind of what it looked like to me. We had 3 points on Monday, 3 points on Tuesday, 4 on Wednesday. That's the day, again, we're going to replay. And then we had 4 on Thursday and only 2 today, it looks like. So if this high stays, it suggests that we're going to go lower, and the first turning point will be a low on Monday. But remember, there's always the possibility that the market could turn around and rally higher, and this high could end up here somewhere and actually be in on Monday rather than today. So enough about this. Let's get started with our replay. And again, this is Wednesday the 22nd that we're going to be looking at here. So let's fire up our accelerated data feed. I have to drag my little control panel back onto the chart here. And we'll turn it on. Let's drag it back here where we can see what's going on. And then 10 clicks will put us at 50 times normal speed. We'll start there. So right now the price is below the trend-defining moving average, but most of our strategizing MAs are just now starting to come below it. So we got to wait and see what's going to happen. Notice that the red moving average is now underneath the trend definer. So unless everything really breaks substantially to the upside, we're going to be looking for the market to make this corrective bounce and then turn around and sell off again. We'll be looking to get short. Okay, we flipped the parabolic and the price is now above the trend definer. But notice that our MACD is still fairly underneath the the 0 line. And we flip the parabolic on the stochastic, and we're coming down strong on the price here. I believe I actually got in sooner than this in the real market, but let's go ahead and get on board now and see what happens. Okay, hit the first target and move the stop. All right. Love it when we hit that second target. Whoa. Stopped out, and this thing shot up like a rocket here. Now, I also got in on this one somewhere around the time it broke above the trend definer. So I'm pretty sure if we got in here, we'd take a hit. So what we want to do is see if the price will come back down at all before we even think about getting long again. So what I'm going to do is I'm going to turn on the data, but let's crank it to about 30 times normal speed and see if we get another bite at the apple here. See if the price will come underneath the blue moving average. And maybe actually turn it down a little bit. Okay, I'm going to pause it right there. All right, the price is just sitting right on top of the trend defining moving average. Now we've got a bearish curve here, but this parabolic is surging up, as is this one, and we've got a pretty good spread on the MACD. And since we've already got a low past the entry point, this could be our first low of the day, in which case we might want to go higher. So let's give it a shot. We'll take a flyer on the long side here. And I think we've got enough space here that we should have a pretty decent chance of hitting the first target at least. So went a little bit lower. Oop, there we go. Remember, if we hit the first target and move the stop, we have at least a minimally winning trade. Ooh, we even hit the second one. Now you're talking. Our third target is way up there. Okay, we flipped the parabolic on the stochastic, and now we have on that one as well. And that's the problem with accelerated data. Sometimes you get a good move like that and it just runs away before you can make a move. People think that day trading is this breakneck, hectic thing, but it's really slow motion by comparison to the accelerated data. All right, we've got not quite a crossover here. We haven't quite hit the 50% mark, but we are definitely below both the red moving average and the trend definer. So I think we probably want to go ahead and get short here. Notice that the red moving average has never gone back above the green trend defining moving average. It went below it here and has stayed below it. It came up and touched it, but didn't go above it. So the fact that we've got this big strong sell-off suggests to me that we are going to see some additional movement down. So let's go ahead and get short, and let's fire up the data. Drag this a little further out. All right. Hit the first target, move the stop. Those flashes of red on the time and sales chart mean that we're making a new daily low, or tying the old one at least. Okay, well, we're going to get stopped out here. Well, if we didn't flip the parabolic, we wouldn't have been stopped out, so... All right, that's what we like to see. And our lower target is still quite some distance away, as you can see. Okay, let's pause that. And we'll finish this. Now, I got caught up in the moment a while back, so this, of course, was a transitional move. But what was our basis for taking it? Well, we have a lower low here, and we have a higher low on the stochastic. This is obviously downtrending, but this is not. So lower low on price, higher low on stochastic means bullish divergence. That usually suggests that we're going to have enough distance to at least hit the first target. Now, we've made another low here, and this low, interestingly enough, is very close to our projected time. But look, we've got a low and a high and another low. So maybe this is going to be a 4-point day. Well, we already know it is, but it's already starting to look like that. Now, do we have a basis for going long here? Yes, we do. Once again, notice lower low on stochastic and higher low versus low and lower low. So I say, let's get long. Okay, got to stop a little too close there, but that's all right. Now, when we were showing our divergence, I forgot that this down move was actually a transitional move as well. So our justification for that was also some additional bearish divergence, once again with the stochastic. It's always easier to spot the divergence on the MACD histogram, but don't neglect your stochastic. From this high to this high, we've got the upsloping line, but from this high to this high, it's actually a downslope. So that's what justifies us taking this transitional move here. All right, we got stopped out, but there may be a chance to get long again since it looks like everything's heading up. We got a pretty good bullish looking MACD, and our stochastic is above 50%. So if the stoch turns around and starts heading up again, that might be our chance to get long. So well, we've got a little bit of a crossover here, and I'm going to move it up a little bit more slowly now. Put it at 20 times. Oh, there we go. All right. Definite crossover. This thing definitely wants to take off. So let's get long again. And start up. Again, there's our third target way up there. With this many contracts, we do okay just hitting the first target. But if we hit the second, we're looking pretty. If we hit the third, now you're really looking good. Obviously, the further away the target, the tougher it is to hit. So we hit the first target well over 90% of the time. Hit the second target maybe 2/3 of the time. Hit the third target maybe 1/4 to 1/3 of the time. I don't really keep hard and fast statistics. I'm not much of a bean counter, but that's just my gut feel based on experience. I'm going to hit that third one? I don't know. All right. And what time is it here? The clock says 12:15. But as I recall, there was not any good trading opportunities after this one. So let's just speed this up a bit, and we'll run out the clock. It just chopped back and forth for the rest of the day. Didn't really give us anything clear to work with here. So we had a total of 1, 2, 3, 4, 5 trades. And what was our score? 35,400. Now, we were using 150 contracts, which is a lot, but it's by no means more than what this market can handle. And if you work up to where you're trading that many, that's the kind of money you can make in one day. All right. Thanks for dropping by. Come back and see us next week.